Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is the 17th of September, and at current 5 a.m. Eastern Standard Time. This is my morning routine. I'm normally up at around 4:15 in the morning, and what I like to do is, of course, go through the headlines. I like the alternative news media first. Zero Hedge is my preferred site of choice. I continue to refresh constantly because I want to see what they have to say. It's not fake news per se, usually. Sometimes it's sensationalized headlines. I will grant that. Overall, though, a good flow of news comes off of Zero Hedge. I do reference it constantly. Also, I will take a look at CNBC, and this is far more of a biased news media. I go into their website in the morning aware of the fact that there's a bias against the President of the United States and the administration. So what I don't want to ignore are certain headlines that are out there, and those headlines are respected by the algorithms. So I need to go into the trading day understanding that, you know what, some of these headlines could influence the overall markets. Now, the headlines that I'm looking at right now: oil prices could move much higher if there is military escalation after Saudi attack. We know that, right? It's a no-brainer. Here's the one that concerns me a little bit more. Expectations suddenly are rising that the Fed might not cut interest rates this week. The Democrats would love this. They would love for the Federal Reserve not to cut rates. Why? It's because they know it's going to happen to the overall stock market. Not that they know anything about economics or about trading stocks. It's that they do know that the stock market will probably decline and it'll make the president look bad, simply put. So, is this a concern? A little bit. But we'll take a look at the charts. We'll see whether or not the gold market is pricing it in, whether or not the dollar is pricing it in. And that's the reason why we take a look at the futures market as we proceed into the trading day. What else I do in the morning is I also scroll through the forum. I don't spend all too much time intraday in the forum. I spend a lot of pre-market time in the forum, after hours in the forum. And I have fellow member Tom, very active member, great guy. He's looking for some reviews of some REITs. I'll pick a couple of them here, and we'll go over those this morning. And I also have some members' stock chart requests. So what I'm going to do is I'm going to first segue over into the pre-market activity. We'll talk about what's going on there, and then what we'll do is we'll go over briefly the trades that Tom is looking for us to take a look at. So let me first take a look at the futures market. And in the pre-market, we don't have all too much happening here. We have the dollar, which is up slightly, but honestly, the dollar is showing, this is a 4-hour chart. These will all be 4-hour charts. The dollar is showing a little bit of topping action here in the pre-market, but a nice rip yesterday, no doubt about it. So the dollar is still looking healthy, but I would be concerned about these topping tails. So what I'm going to do here, I'm going to draw my resistance level. We'll keep an eye on it. We'll watch for a breakout or a breakdown. Actually, what we could do here is this, is just simply connect the dots. And the dollar is important to us because we're watching the dollar because it can influence the price of precious metals. What have precious metals been doing of late? They've been rallying with the US dollar, and that's out of geopolitical fear, risk. So they trade in tandem. You're seeing that a lot lately. It was rare between uh, Brexit, when that vote occurred, and the aftermath. Then you saw the dollar, gold, precious metals trade together. Ever since then, until late July, mid August, you didn't see them trade together at all. But now you're seeing them trade in tandem, which is very, very interesting. It's just a sign of geopolitical risk that's out there. Taking a look at crude oil, wrong click. So crude oil is down slightly this morning, and we're seeing a bunch of topping tails. I discussed this with members last night. I'm going to be having a live chat session with members tonight. It's going to be for members only. If you're not currently a member, please sign up for the 14-day free trial offer. Join us tonight. Wednesday, it's going to be my first group session with members. It should be interesting how I fumble this up, because I'm not all that great with live stream yet, but I'm learning. And we had a great time on Sunday night. So if you're not currently a subscriber to YouTube, click that like button and hit the bell so you get notified of these future videos in the future, if you would. So oil, this is the Brent price. Oil is showing a little bit of topping action here this morning. And I'm not going to be the least bit surprised to see a pullback here on oil. As a matter of fact, this 4-hour bar, we're beginning to trade below the lower band of support. So we're beginning to see a little bit of weakness here on oil, technically, on a 4-hour basis, on an intraday basis. Don't be surprised to see a pullback here on oil. Now, that'll bode well for gold, silver. Why? It's because they don't want to see oil ripping higher. That means inflation. That means that there's more pressure on Fed Chair Powell to not cut rates. Major problem. Gold. We are down this morning by about a little over a third of a percentage point. We have rallied back off the lows of the session. You can see that we're retesting support yet again. We had broken down below it yesterday, and now we are retesting it. What we're looking for here is a breakout above this resistance level. And if we get that, it'll be game on to the long side for gold, the miners, and in all probability, silver as well. Let's bring up silver. Normally I would edit out these gaps, but I can't do it because of the live stream. All right, so silver broke out. It is breaking out at current. Coffee break. We broke out above this. Let's turn this red to make this clearer, because this now has to hold. So we're trading above this. Let's call this the primary resistance level, because this was long-term resistance on a 4-hour basis. And now we are challenging the secondary upper band of resistance. So we're looking for a breakout here. We're currently long of silver. We're looking to buy more. No rush here. We want to see how things play out with the Federal Reserve, get that indecision out of the way. Moving on to the stock market futures, we'll begin with the NASDAQ. Let's pull back here a bit. So the NASDAQ obviously rolled over. I mentioned on Sunday night, the live stream, that I expected that the IWM, the small caps, would pull back and would probably get a rally, if not close positive on the day. We did that. The same did not happen for the NASDAQ, nor did it happen for the S&P 500 and the Dow Jones. They did rally back off the lows of the day, but the fact that the president was saber rattling yesterday did not help the stock market futures. I think that's done until after the Federal Reserve meeting, because the president is only hurting himself. He wants rate cuts. He's not going to get that if the price of oil continues to skyrocket. So we're expecting a quiet period for the president until the Federal Reserve meeting. And if he does say anything, it'll probably be dovish relative to Iran. So here's our resistance level here and our support. We're looking for either a breakout or a breakdown. It looks at current in the pre-market. While we're down on the session, it appears as though we may pop up higher this morning. And have no doubt that if there is any question with regard to the direction of the Federal Reserve, right now the markets are anticipating a rate cut. If they do not get that, all bets are off the table. This market is going to take it on the chin because it's not going up on fundamentals. It's not going up on geopolitical risk, that's for sure. It's going up at current because their traders are filled with heroin vis-a-vis QE. From what I understand, the Federal Reserve has already begun to buy back debt. They're already in there buying back debt. So I would expect next reporting period to see the Fed's balance sheet begin to tick back up. Traders are expecting rate cuts. Again, more monetary fiscal heroin. So they're looking for it. If they don't get it, look for withdrawals. Let's take a look at the S&P futures. Very similar to the NASDAQ. We are holding slightly, excuse me, the 3,000 bar. So again, we're looking for a breakout or a breakdown on the S&P 500. Watch the headlines. The algos will go the direction of the headlines on a knee-jerk reaction. So right now, going into the trading day, I'm neutral with a bias to the bullish side for stocks. That could all change by 9:30. Members, I'll stay in contact. Later on this evening, we'll do a live stream and we'll talk about the day's events after the markets close. I'm thinking about 6:30 p.m. Eastern Standard Time. That way, everybody gets to be able to get home, settle in, and then be able to flip on YouTube to be able to check in and watch the live stream and prepare your questions. Let's segue over and into the stocks that our members submitted for me to review. In fact, what I want to do here is we'll bring up TrendSpider, and the first chart up. This is for fellow member Tom. Tom was looking for feedback on some of the real estate stocks or real estate related stocks. In this case here, we have Zillow Group, and obviously Zillow, which I happen to like a lot. Zillow, in terms of their product, their website is really good. Zillow has taken it on the chin, and we are seeing some bottoming action here on Zillow. Now, let's take a look at a monthly chart. All right, so you seeing some bottoming action. We're probing the lows of January 2019, and we spent 3 months in a row bobbing around that area before rallying back. The question is right now, do we rally back, or is there something more dire, right, more nefarious going on over at Zillow Group? So right now, this would not be an investment for me, unless of course there was value, and I really don't have time to go over the fundamentals. But technically, we're beginning to see some bottoming action. In all probability, given current bottoming action on a monthly basis, we're going to bounce around here for a while. But I couldn't be bullish on the shares until, as an investment, I couldn't be bullish on the shares until we rally up and through this upper band of resistance. Now, on a daily basis, we're seeing something a little bit more interesting in that we are seeing the potential for a breakout here. We have a higher low, and we may break out above, let's call it 32 per share. If we break out, pull back, retest, that would be interesting. I would be looking at two things. And those two things are, first I'd have to ask myself the question, what are my catalysts to send these shares higher? Is it a short squeeze? Or is there value, or a mixture of both, right? Then I would be able to, A, decide what my position sizing is going to be, B, whether or not I want to be involved with the trade. If there's no catalyst and you have a stock price this week, what's the sense of being involved with it, right? So Zillow looking interesting, not an investment, possible swing trade only if we break out and above this upper band of resistance, or if we pull back and we hold this lower band of support with the stop loss right below. Next chart up. Let's go to ATVI. Activision. Heck of a run here. I couldn't be a buyer here. I mean, longer term, when you take a look at a weekly chart, we've had a beautiful base form. At current, on a weekly basis, we are trading above the 2 standard deviation Bollinger Band with topping tails. Now, what that implies to me is that we have resistance above, overhead supply, right? So we need to pay attention to the signals that the markets are sending us. So you can see that back here in June of 2017, we had bottoming action. Back here, July of 2017, more bottoming action. Back here in early June of 2017, more bottoming action. So what was resistance back then in 2017 is now acting as support. So I would wait for a pullback here. The chart's looking good, a great sound base. This cannot be discounted. You have a W formation which is formed, and we have a pivot point which has been broken through. The problem is it looks as though you have some institutional buying in there vis-a-vis volume. That's how I'm determining whether or not it was institutional buying. And you probably had some shorts covering. So back to the daily chart. When will we look to add to or open a position here? Let's throw up some trend lines. And you can see by using the automated technical analysis that of Trend Spider that we hit resistance, we backed off. 53.73 would be the first support level I'm looking at. For a more extreme pullback, I would be looking at 51.58. So those are my support levels. Now, what I would do here generally is take my crayon out, draw a support level, and this is not the straightest one in the world, but I'll use a sensitivity indicator that gives me room for error. ATVI, daily support hit, possible long, okay? So we'll keep this active for a few days. Let's go with I want to know on a 12-hour basis. I will leave that the same. Set it and forget it, okay? This is the value of TrendSpider. Set your alerts and move on with your day. Don't keep, if you have a day job, if you're a trader, if you're a day trader, fine. It's your job to continue watching the charts all day long. If you have a day job, set your alerts, go about your day. And I'll put a link below in the description area. Use CT25Z as the discount code for the contrarian trader for TrendSpider. If you're interested, they have a 7-day free trial offer. It's included with my silver and gold level memberships, free. NVIDIA. All right, NVIDIA is a great company. There's no arguing that. So where I like to begin is on a weekly basis, and we have a really nice W formation forming. We have broken out above this upper band of resistance here on a weekly basis. That's good stuff. So what I want to do is I want to see in this market environment if NVIDIA pulls back and retest weekly support, because NVIDIA is a great company, right? What's not to love about NVIDIA? And I have to put reminders down here because I set so many alerts that I forget at times why I wanted to get involved with the trade. So not to have to refresh myself. Possible long trade, weekly basis. So this tells me how long in duration I would want to go out. And I want to know pretty quickly all right. Got it. All right. So our alert is set for NVIDIA. So we have NVIDIA, HCVI, Parker Hannifin is another stock that I'm watching. I already went over that the other day. Let's go on to BMY, Bristol Myers, as Kramer would say. Oh, I want to go back to Activision, not Activision, NVIDIA for a second. I want to point out, I apologize. Well, something's happening here. NVDA. Okay. There we go. Fat fingers. All right. What I wanted to point out here on this chart, and I forgot to say it, while we broke out and above this resistance level on a weekly basis, which is really technically great, right? We haven't broken above the pivot point. So what we have here is a W formation. That's great. It's a great base. It's a great setup. Now, the problem I have here is that we are putting in lower highs, right? We need to see that change. We need to see NVIDIA break out above this pivot point here at, let's call it 195 per share on a closing basis. So on a pullback to this support level, I would be willing to open up a long position. I'm willing to scratch the itch, buy a few shares, get some skin in the game, and then I would look to buy more aggressively on a breakout above this pivot point. That's critical because now you have a sound base to buy off of, a breakout on a weekly basis as highlighted in this alert. And now we're looking for a breakout above this pivot point here. That is really a great confirmation that the W formation has completed, and now you could see a continuation move higher. There will be resistance above overhead supply, no doubt about it. So you want to buy on strength, buy as we break through these resistance levels. So thanks for spending the time with me on the video to clarify. BMY, weekly view. All right, so we were in an ascending wedge formation. We broke out of that wedge the week of August the 19th. We have a lot of overhead supply here, as noted by the topping tails of not this week, but the prior week. So that's concerning, right? Because uh, you've had traders sitting through this sell-off, sitting through all the geopolitical tensions. They've been holding on. And frankly, for those who bought here, they want their money back, right? So they're going to look to sell to get made whole as that green entry on their trading platform turns green again, right? So right now, I couldn't buy these shares. The time to have bought them was on the breakout here and the pullback. Now, looking at a daily chart, now on a daily basis, we're in a ascending wedge formation. I'm going to overlay here on TrendSpider the weekly resistance levels. Nothing's showing. We do have daily resistance above. If you're buying this as a swing trade, we closed out the day yesterday at 49.47. You have resistance immediately above. I don't see the value of buying these shares for putting this dollar size $50 stock, putting that much money into this investment for what, a rally up to $50.50 per share. I don't see the trade here. If it's an investment, then sure, buy longer term as we break out and above resistance levels, or buy as we hit these lower bands of support. At current, I would avoid Bristol Myers, especially in this market environment. I'm going to leave off here with RLGY, which is another REIT for Tom. Let's clean this up. And as I always like to do, I really don't like to start off with daily charts because they're too noisy. I want to get the feel for where we have been, and that gives me an indication of as to where we might be going in the future. And where we have been with Realogy Holdings, I've never heard of this company. We've been hammered, right? Very concerning. You have resistance immediately above here at $6.62. We closed out yesterday at $6.13. So no upside here really in the short term. Let's throw up a daily chart. And then what we'll do is nice rally off of this 4.27 level. That's interesting. Let's throw up some automated trend line. Yeah, look at this. I mean, this is on a daily basis, right? You have a lot of overhead supply here. So I couldn't go buying these shares until we closed above 6.62. This is the value of using TrendSpider and the automated trend line tool. I mean, I'm doing a live stream. This is how much it helps me. So be careful here if you're looking to put on a trade here, please. Now, taking a look at a weekly view or a daily chart with weekly overlays, not much going on here. So these shares would be a buy, especially if they're a yielder. It's a holding corp in the real estate sector. They have to be paying a dividend. I don't know that to be a fact. I would have to do more research. I'm making that assumption. Do more research or due diligence on your part before you go entering the trade here. The shares would be a buy on a rally up and through $6.62. Let's see if we have any questions before we shut it down here. Not much going on. I didn't expect there to be many viewers this morning. This is really just a test. And as you can see, I'm fairly transparent with what we do. Any questions at all? Okay. Folks, with that, have a great and profitable trading day. Thanks for joining me, and enjoy your Tuesday. Be well.